Well, in a note yesterday, my next guest said that the jobs report could lead to an explosive day of trading. The numbers have come in, and they're pretty explosive in their own right, basically missing estimates, I'm getting my words out, and also a decline in the unemployment report, but really a gain much lower than expected of private employment. Jim Bianco is the president of Bianco Research, joining us this morning from Chicago. And Jim, we can expect a pretty volatile trading day today, right?
Oh, yeah. These numbers were, even before they were released and surprised, it was one of the tougher payroll reports for us to try and analyze. The estimates were all over the place. The consensus of 515,000 was actually the highest number ever guessed. So when you have kind of extremes like that, and I mean, in 30 years, we haven't seen a number that guessed that high. So when you have extremes all over the place like that, you can have a volatile day, and that seems to be what's happening right now. And
if we do see some pretty big losses, I'm talking about triple-digit losses for the Dow today, what does that set us up for then?
Well, the market is kind of in a consolidation pattern. The bulls would argue we're not breaking down anymore, but the bears would argue we're not breaking out. And the market can't seem to go up or can't seem to go down. It's just going to wear everybody out with volatility. So I think this payroll report is going to just continue to frustrate everybody. We're just going to have, not only we're going to have a triple-digit open, but if the futures are right, we might be a 200-point down move on the Dow, at least to start. And then we're going to wind up being pretty much unchanged on the week, if you can believe it, at that point, but with a lot of movement.
Well, is there any chance then, given that, Jim, that the markets, given a day or two to digest this report, will suddenly realize, look, there's a lot of noise in here. I mean, we're not talking about a clean report by any means. You've got the census workers, you've got government spending, you have the home buyers credit, all of that. And might they look ahead then? And in fact, this report, in retrospect, might not seem so bad after all.
They might, but what was interesting was the chatter in the market right before the report was we were about to change focus away from the report to the plunging euro, and that if it went under 120, that could be the dominant headline of the day, despite what the payroll report said. So, yeah, if we look past this day and we calm down, the problem is the rest of the news isn't good. As a matter of fact, it was kind of the opposite. We were hoping that the payroll report was going to be a big offset to sovereign debt crisis in Europe and everything else, but it's not. So where is the other good news? And that's why I think the market's not taking this so well.
I see. So there was some hope, I suppose, that we could actually just come out neutral from the day then.
Yeah, exactly. And now we don't have that. Everything is up in the air. There's an old saying on Wall Street that expansions don't die, they're killed. And what usually kills them is financial market and commodity volatility. And in the last month, that's exactly what we've had, financial market and commodity market volatility. So everybody's looking at the economy saying, you know what, up until around May 1st, it was looking pretty good. But now that we've got all this volatility, this is the type of thing that can turn an economy around. And these payroll reports aren't helping that situation. And that's the fear that we have right now, is that we are turning around, and that is to the downside.
Well, then where does that leave the markets? I know you mentioned a little bit about, about what that sets us up for, let's say, even next week or a little bit longer than that. But where does that leave the markets? I mean, where does that leave an investor then here?
It leaves the markets vulnerable, and investors should be somewhat worried. The news is not good. The news is continuing to be poor, and the markets are reacting to that poor news, and that's probably the most important aspect of it. So we are continuing to correct. I guess the question we have to ask ourselves is will this correction in the market and this volatility start to really hurt the real economy, a la late 2007, early 2008? Or will the economy be able to shake this off? For the moment, if it were to stop now, I'd say the economy could shake it off. But with today's big plunge, it looks like we're not stopping for the moment. And that's really the gauge that we're going to have to try and figure out.
And then that becomes a self-reinforcing cycle then, Jim, right?
Absolutely. That's what 2008 was all about, was when the markets plunged, it created economic weakness to justify the plunge, and we were caught in a vicious cycle. Now, we're not there yet, but we're kind of moving in that direction, and that's what's so concerning to everybody.
Okay. All right, Jim, we'll have to leave it there, but great to talk with you. Thanks for making it for the interview. Jim Bianco, the president of Bianco Research.